I want to first get to the investment. And Elliot, let's talk about this investment. What does this equity investment specifically do for you? It has to do with like operations, doesn't it?
It does. The important thing for us is being able to go into more asset classes and really invest alongside of our partners. What we do, as you mentioned, Carol, is provide capital as well as access, as well as several different things to the consumer lending market. And what we're ultimately looking to do is to connect.
A massive market, by the way.
Huge market, $200 million in unsecured consumer last year. We're trying to connect, at the end of the day, big investment firms like a Fortress with really large consumer lending firms like a SoFi.
Yeah, Bob, come on in on this investment. There's a lot of noise around credit markets, around private credit right now in particular. You have a very diverse portfolio at Atlas Merchant Capital.
Yeah.
Why make this investment right now?
You know, we have seen a real unbelievable development in the credit market since 2008, the great financial crisis. And I think so much of credit ended up on bank balance sheets prior to 2008, particularly outside the U.S. You know, the big banks in France, the big banks in the UK, all the credit was on the bank balance sheets. And we have seen a real development. Some call it private credit. You know, it's Edge Focus, it's Fortress. There's so much diversification. And I think that's why we have had such a long period without a real blip in credit. It's become, you know, it's a real credit to the U.S. capital markets. I think in terms of consumer credit, and I saw this, you know, through the lens of Barclays. I saw it very much through Barclaycard, which dominated the credit card and consumer credit market in the UK. Is again, it's much more diverse. It can be spread out, and I think we have originators of consumer credit like SoFi in Edge Focus. We have capital that likes to invest in consumer credit like Fortress. And I think one of the things that we can do together is we can find more originators, we can find more investors. And, you know, when we look for an investment, you know, you want to have someone that has a unique position in their market. That's Edge Focus. You want to find someone that has strong leadership. That's Elliot and the team. You want to find a business that's profitable, but most importantly for us, you want to find a business that has both a willingness and ability to grow. And this can be a significant increase over the next 3, 4, 5 years with access to capital to grow this business. So it's unusual in financial services to look at investments where they can be multiples of where they are today. But what Elliot and the team have built can be multiples of this. It's a big market.
You mentioned unique focus that Elliot has and his team. What is that unique focus, Elliot? Because the consumer credit market, a lot of players, a lot of folks in there. What is it that you guys are doing differently? And I'm curious then, like what you think they're doing differently that's appealing.
We do 3 things really well. We have access to a ton of data, our modeling approach, and then access to various other consumer lenders. From a data standpoint, hundreds of billions of data points in the U.S. consumer across lots of platforms. We know really well at all times what the consumer is
Where's that data
like.
coming from?
2 main sources, from platforms themselves who issue loans, as well as the credit bureaus. Lots of other alternative data sources as well. From a modeling standpoint, we have PhD researchers where all they do every day is research how to model the consumer, see what the latest trends are, and then finally access. None of this matters unless you have really good access across lots of different platforms.
Bob is,
they have one more thing. They have incredible
This
discipline.
is someone who did, I assume, the due diligence.
We did a lot of work on this. They have incredible discipline. And both the originators and the providers of capital love what they see here because of the discipline with their own capital, but also with their advice and counsel. So it's in underwriting, but also in advising.
Does that mean only certain types of consumer credit that you're going to, like certain categories, certain types of, like tell us, is it top tier? Like what are you going for?
We look across the board. Generally speaking, we can provide the most value in near prime and subprime credit.
Near prime and subprime. Okay.
So on that, Elliot, SoFi and Happy Money are 2, you know, existing deals that our Bloomberg News team has reported on. Would you think about expanding to, I don't know, other places like buy now, pay later firms, for example?
Absolutely. I think it's part of the reason for the investment. We want to grow beyond unsecured, which we're really big in right now. We're getting much bigger in auto. We want to be in point of sale medical. We want to be in home improvement. There's a ton of areas for us to grow into.
What are some, are you talking right now to any specific buy now, pay later firms or any of those firms in the spaces that you just mentioned right now?
Many of them, absolutely.
So
It's a
we should
huge focus of
expect
ours.
deals. We should expect deals to be announced
Absolutely,
soon?
our LPs are asking for it as well.
Okay.
It's got really unique characteristics.
Do you think that?
We're actually going to have a pretty big announcement in about 2 weeks. So
I love this.
So, okay,
All right, well, you guys
so
gotta come
mark the
back.
date. But that's appealing to you, that part of the market.
you know, Carol, as I said,
Yeah.
it's about a unique position which they have. It's about strong leadership. It's about profitability. But most importantly, what we love is we're not just great investors, we're great operators. We love to roll up our sleeves, go out and visit clients, help them think about expansion. And when you look at a business that is this disciplined and this profitable and this focused with the market out there in consumer credit and beyond consumer credit, this is exactly the kind of investment that gets us up in the morning.
Well, so then what are you going to do, Bob, for Elliot and his team? You know, you said you guys like to roll up your sleeves. You're making this injection of capital. You're now a minority owner in the firm. That's just the beginning, right?
Do you have an office
First
there
and
yet?
foremost, when Carol and Tim call, I come here to Bloomberg.
I like that. And maybe, I mean, they're out in Denver, so maybe you could go do some skiing this winter, too.
It's out in the ether now, so. But yeah, how involved? Like, it sounds like good old
So
fashioned.
Fortress is a great partner.
Yeah.
There are other institutions that David Seamus and I and Brian Saunders have been very close to over the years, and other investments or in our career. And you know, David was with J.C. Flowers in my time at Barclays. We know a lot of people that would be interested in being capital providers, but until now, they have not heard about Edge Focus, and they have not heard about the business model.
Who are the investors already involved with you? What other investors might be coming in? You talk about the capital providers. Like, who are we talking about?
All the really large private credit firms you've probably heard of. Like I said, we've talked about Fortress publicly
Yeah.
quite a bit.
Yeah.
Several others as well.
Okay, so more.
Yes.
More.
You know, I noticed in the press release that this is focused on hiring efforts. Part of this injection of capital, partly focused on hiring efforts to build out a big part of your team. I'm curious about talent that your firm is targeting in a market that's really, really competitive.
Incredibly competitive market. The biggest thing for us is hiring researchers, especially in the age of AI, making sure that we can find folks who really understand the data, can use AI tools effectively, efficiently. It's one of the most important things for us. Over 2/3 of our firm is technology based.
What goes further? You're already very technology focused, AI focused. I'm curious, like, what's the next step? Where do you go with all of this?
New asset classes. We've done a lot in
Okay.
consumer unsecured. We have a long way to go in subprime auto. We have a really long way to go in point of sale, and there's several other asset classes for us to get into.
Bob, provide some context here, given your history in banking, and you know how what Elliot's firm is doing, in your view, is different from the way that a big bank can profile a consumer.
I think it's a number of things, but I think first and foremost, you know, the traditional banks prior to 2008 just had a very, very different approach to managing what was in their portfolio. You'd see the quarterly earnings, and you'd see a little bit of provision here and provision there, but it was not really asset or loan specific. Even in Barclaycard, which was really consumer credit and unsecured consumer credit, it didn't have the depth of this. So it's the incredible discipline and the incredible technology that they've brought to understanding credits, so that the separation from kind of near prime to prime and subprime and things like that, the number of gradations on that continuum are incredible, and that's what they've done. So they're much, much better at managing access to credit and the return that comes from credit. And I think we've seen it broadly in the market. Like,
Yeah.
since 2008, we haven't had a blip in credit. We've never had a cycle quite like this, and I don't think it's about to stop.
Yeah.
Because there are so many more participants, so much more technology, artificial intelligence that's being applied to analyzing the risks associated with every single piece of credit.
Are you saying this time is different?
I am saying the cycle is very
This cycle is different, okay.
Because of technology, because of AI, because of firms like Edge Focus, yeah.
Okay.
Meaning that
Hey, but by the way, it doesn't mean there won't be mistakes.
Right.
Right.
For people that don't use that technology, for people that don't use Edge Focus, you know, there will still be mistakes, but I don't think they'll be systemic. They're not going to be across the piece. They're not going to be a crisis for the industry. They may be a crisis for an individual fund.
So, in other words, not just that the risk is spread, but if somebody who doesn't have the great oversight or
Right.
risk,
There'll
that's
still be mistakes made, Carol. There's
Yeah.
absolutely. And I think what will separate Edge Focus is more and more people are going to want to have access to people like Elliot and his team so they can move into that echelon without trying to build it themselves.
So let me ask you, there are always cycles, and I'm just curious how exposed Edge Focus is specifically to consumer credit, and how will you guys be protected if ultimately we see financial conditions tighten? Things go through cycles, and then we start to see end user delinquencies increase significantly. I mean, these things happen.
Absolutely. We're very long consumer credit. There's no question about it. At the end of the day, we need to
But what do you do to mitigate risk? Like how?
It's all about having that loan level selection where we can use all the data we have at the individual borrower level to ultimately buy better portfolios of assets for investors.
So you're saying the data, the algorithms, the
it's
AI,
the data and we also have to monitor it really well too. We've built out tons of proprietary internal platforms where we can watch this stuff in a real-time basis and understand exactly how the consumer is evolving.
And so far, in terms of issues that have gotten you into trouble, like what percentage?
I mean, look, there's no investment that's ever perfect, right? We go back to 2022, 2023, for example. Inflation was really challenging on the consumer, there's no doubt. But you learn a lot from that. You add into your algorithms, you add into your models, and ultimately you create a much more sustainable, defensible platform.
Well, Carol brings up a good point, and you know, what I heard from you just now speaks to what it sounds like you have what you think is a very solid real-time view of how consumers are doing. We try to figure that out each and every day on this program by looking at data that we get from the Fed, data that we get from different bureaus, alternative data as well. How is the consumer doing?
Yeah, we have a lot of really cool insight into how the consumer is doing. What I can tell you is that applications continue to increase across all the platforms we have. Applications are up year over year on the
Is that a good 20%. Thing?
You know, we're actually seeing delinquencies stay very, very consistent.
But consumers need more credit.
They are, and we're actually seeing an increase overall in debt-to-income ratios across consumers. Although the consumer looks to be needing some more credit, and that's being shown in the applications, delinquencies are being pretty constant right now.
Why is that, Bob? Like, what do you like when you look at that cycle or that data, those data points?
Which part of it? The fact that
where you said that debt to income, right, is rising, and yet delinquencies are low. How do we explain that?
You know, I think it's more discipline in the system and more providers of capital. So I think the same thing I talked about since 2008 on the investor side or the bank side in terms of their portfolios, I think consumers are much more mature, much more sophisticated. So it's not surprising that you would see less of an increase in delinquencies than you would in the amount of outstanding credit. That would be unsurprising.
So, Bob, this is a minority investment in Edge Focus right now.
Are you going to ask when it's going to be a majority?
Yeah, that's exactly what I was going to ask.
Sorry.
Is this the beginning of something?
Perfection is never.
Is this the beginning of something, or is this
absolutely the beginning of something?
Is there going to be more money coming from you, or do you think this is enough for them to go out, do their thing, and then there's an exit at the end?
I think the beauty of being Atlas Merchant Capital is a couple of things. One is our investors are very, very patient. If we go to them in 3 or 4 or 5 years and say, this isn't going to be a normal cycle, we want to stay in this longer. We have a number of large sovereigns. The biggest issue they face every day is reinvestment, not exit. So we have that option in terms of the relationship we have with our investors. But I think most importantly, if there was need for more capital, because the business is growing and valuations are going up, that's a good presentation for us. It doesn't mean we would go to majority. That would be unusual, and that might be in a distress situation, which would be the furthest thing from our mind in this situation. But if we have opportunities down the line to add additional investment at higher valuations because the business is growing, both in terms of products and in terms of customers and clients, that's fantastic.
So we'd be remiss. We've only got about a minute or so left here, Bob. You have seen, iconic for anybody who's watched Wall Street and financial markets. You've seen a lot of different cycles, good, bad, different. What do you make of this market cycle, which is there's angst, and yet we hit records? And how do you make sense?
Well, I think two things, Carol. And I think on one side, and I see this, I've been very, very fortunate to be the chair of the advisory board for the U.S. Export-Import Bank with John Jovanovic and the team. And they, for the first time in decades, are profitable. They are really driving performance with middle market companies across the U.S. And what shocks me is how profitable they are. What shocks me is how excited they are at the tailwinds coming from this administration in terms of less regulation, more pro-business. And so the CEOs of middle market companies across the states are pretty excited. I think in terms of the cycle with AI that people are talking about, and I suspect that's the other piece that you're asking.
It is.
I think there'll be a correction. There'll always be a correction. Every technical innovation we've had, from railroads, from electricity, from the internet, will have a massive correction at some point. It doesn't feel like it's going to be tomorrow, but you know what? With any technical revolution like this, there's going to be corrections. It's not going to be one. It doesn't feel like it's around the corner, but I can assure you there'll be a correction. I just can't assure you when it's going to be.